Hey guys, it's Cameron Tope. Every week I bring you tools, tactics, strategies, lessons I've learned, things that have helped me build up a sizable rental portfolio about 2 years. Today I'm got a little whiteboard here, and I wanna talk about my crazy hair. The meeting I had with a financial advisor. So I actually thought it'd be entertaining to listen to this guy's spiel about all that he had to offer as a financial advisor. So what I did is I just called him, act really stupid, act like I had no idea what I was talking about, just to hear what he would say. And I'm going to share with you in this video kind of the information, not kind of, I guess it is the information that he relayed to me, and I think you guys might find it pretty interesting. So let's get to it. So I got my trusty whiteboard back here, and the first couple things, so I'm gonna get in some figures and what he exactly said about the money and investing and financial advisors. Guys, they're you got to be careful. They call them different things: a registered investment advisor, a broker, sometimes accident advisor. They'll have all these designations and fancy names to confuse you. So be cognizant, do your research, know what you're getting yourself into. If you do want to go with somebody, make sure they're a fiduciary. But anyways, this guy was showing me some new software, some very cool stuff, and said, we can do this all in one place. We can handle all your finances. And I sat there and I said, this looks very similar to a service that I use right now. I said, oh, what is that? And I said, mint.com. And he was like, oh, yeah, it's kind of like Mint, but we do all this stuff, and we do this, and we do that. It is literally their software, their proprietary software was essentially identical to Mint. There was a little bit of difference and variation on some of the investment side on things you can do, but honestly, when you invest passively in index funds, you don't need some of that information. Actually, Mint had a couple other things about tracking the Zestimate, the Zillow estimate for homes, your car estimate with Kelley Blue Book. So Mint actually had some more features that this proprietary software that you get doesn't have. So he had this software. He had some of these expert advice to help you, put you in a portfolio with the best stocks and mutual funds. And then he would help you with insurance, and they would do very little for taxes. He said, we can talk a little bit about that, but we're not really tax strategists in that side, or asset protection or tax liability people. But we can hook you up with somebody, blah, blah, blah. They know somebody, obviously. So, and guys, bear with me with some of the lighting here. It's because of the whiteboard. But I'm going to get back here and write on this in a second, so it should look a little bit better. Yes, Mint, all these funds and what have you that they put together, and then insurance and no taxes. They can hire those out. So essentially, you can do everything that this company does for free. I mean, essentially for free. Mint is free. You could use personal capital, and there's those services you can use that'll bundle things, and they cost a few dollars a month or nothing. But you can do essentially what you can do with this software for free. Vanguard, all the information that this guy had was free at Vanguard. They offer for free. They'll do analyzers for you at Vanguard. They have all sorts of tools and things to use at Vanguard. Insurance, that is something I'm not really all that familiar with, to be honest with you. I haven't had to deal a lot with insurance. I know people use a lot of insurance for various bits, right? I mean, people insure if they're a hand model, they insure hands. If they're an ass model, they insure their ass. If you have a fancy car, you get really high insurance on that. Homes, wedding rings, anything, all sorts of crazy stuff. So I'm not really all that familiar with the insurance side, but to me it didn't sound any different. He said it was just something he did in-house. You can go elsewhere if you want to. and also the tax strategy side. So that's something you want to get into. Now, having said all that, like I said, the main things this guy offers you can get for free. What were his fees? So let's see here. Let's see how fees. I said, what does all this cost, doctor? Tell me. So this financial advisor, I can spell, financial advisor charged 0.1%, 0.1 to, what did I say in my notes here? To, oh, excuse me, it was 2%. So he charged 2%. Vanguard, guys, there are other companies out there. There are other things, other ways to invest in index funds. I just like Vanguard the best. I've used them several times. I like them. They've always been good with customer service. And Jack Bogle essentially invented the index fund, so I kind of want to be behind that. Vanguard charges 0.01% for some of their, for average, I'm just averaging. Some of theirs are less than that. I think it goes from like 0.04 to, like 0.17%. Most of their index funds. Now you can get higher than that, obviously, if you do small cap and international and all this other stuff. But what does this really mean? What is this 2% or 2 basis? That's actually 200 basis points. Now some people don't. Is that backwards? That would be bad. I hope not. We'll find out. It looks backwards. 200 basis points. A basis point is basically 1 basis point equals 0.01%. So 0.1% equals 10 basis points. So this is literally 200 basis points versus 10 basis points. Capiche? 1% is 100 basis points. So this guy is charging, it's almost, it's 10 basis points for that. It's over 20x. It's 20x what you would get at Vanguard. Now, how does that really affect you? I know we want to get talking to the numbers, so let's look. This translates to, I did the numbers here. Let's see, 10,000. So I'm saying you invest 10K for 30 years at 7%. Hopefully y'all can read that. For the advisor, well, we'll say this first. For no fees, if you just did that at no fees, you would have $76,122. That's no fees. No fees. If you have, let's just do this one first because it's better. If you're using the Vanguard, you will walk away with $74,017 after 30 years. This is a one-time investment, by the way. If you use the 2%, what do you guys think it would be? 70,000, 60,000, 50,000, 45,000? Seems a little excessive. Glad you asked. I'm going to write this actually in red just because it's so preposterous. This is how these Wall Street bankers get rich, boys and girls. This is how it happens. $43,219 for a difference of, we're just going to say about $31,000. 31 G's, or a 43% reduction. Holy shiza. You just lost 43% of your portfolio. That seems a little, do you guys think that's a little much for literally them taking absolutely no risk whatsoever? Let's see if we can just turn this up a little bit more. That look a little bit better, ladies and germs. So they take none of the risk at all. They take none of it, and they get to keep. They basically keep 31,000, which is a reduction of 43%. You basically give them 43% of your return for doing you absolutely nothing, stuff that you could do with Vanguard or with Fidelity or some of these other places. Like I said, I like Vanguard. I know them, I trust them. And this basically works out where you're paying for no improved performance. None. It's just the statistics show, and guys, I could rattle them all off. If you're interested in the statistics on why these don't overperform, please shoot me or just comment below, and I will gladly provide you all of those. But look at this. I mean, how crazy is that? You're willing to give up 31 grand? And see, this is what happens though. I'm not going to get a soapbox here because I think I made my point. But what happens is somebody invests $10,000 and then they say, oh wow, I've got 43 grand in 30 years. It was 10 grand then. How great is that? No, they don't realize that they could have had $74,000. Do you see? I mean, holy Moses. Yeah, they're happy with this, but they never saw this. And the financial guys are not going to share this information with you. So, long story short, guys, that's what I found out. This was an advisor, a service they offer, and you know, that's what their fees were. I just wanted to see. I called them and politely said no, thank you. And but I listened to their spiel, acted stupid, asked questions I think anybody would ask, and they didn't have good answers for them, And this is kind of what if I went with this company and I invested 10 grand, probably average 7%, maybe a little more, maybe a little less, whatever. You pick whatever number you want. But this is what would have happened. I would have lost $31,000. I would have lost 43% of my money by going with these clowns. And that's not this company in particular. This is every company. Every investment company besides Vanguard and a few select others, some of Fidelity's funds are really good, they do this to you. So be very cognizant of these fees. When they say 1 or 2%, think, instead of 2%, think 200 basis points. Instead of 0.1%, think 10 basis points. Okay? So think about it that way. It'll really put it in perspective, because when you think 1 or 2%, you don't think about that stuff. It's like, oh, no big deal. This is a big deal. These are big numbers. To me, $31,000 is a big deal. And I'm telling you, over the long term, those numbers get wider and wider. This is one $10,000 investment. I hope most of you that are listening are going to be making a lot more investments than $10,000 over your lifetime, which means this number is going to get more dramatic. The number you're going to give them is going to get more ridiculous. 43%. Wow, nuts. Okay, that's my soapbox for the day, guys. I hope you enjoyed it. If you did, let me know. If you didn't, let me know. If there's something I can do better. Sorry about the lighting. I'm trying to get it right, but this keeps adjusting, so I look a little dark. But I hope you guys can see this. If you like this format, let me know as well. Appreciate y'all, and I'll see you guys next week.